Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news financial markets are sensing a turn lower in the giant US economy, and a risk-off tone is spreading. Impending new tariff announcements there are casting a pall over everything. First, despite another fall in long-term mortgage interest rates, US mortgage applications were weak last week. They fell by 2% in the week following a 6.2% drop in the prior week. Applications to refinance a home decreased 5% to the lowest level in a month. The applications for a mortgage to purchase a new home, however, rose 1%. New American durable goods orders in February unexpectedly rose 0.9% from January, following an upwardly revised 3.3% jump the prior month. This February result was much better than the anticipated 1% fall. But year on year, the gain was just 0.5%, and the result was largely ignored by financial markets, partly because it isn't expected to signal any longer improvement. One-off defence aircraft orders, up 9.3%, accounted for most of the gains. Non-defence aircraft orders for capital goods were 1.2% lower in February than a year ago. Markets noticed that. They probably also noticed the latest update of the Atlanta Fed's GDPNow tracking, showing a current estimate for the first quarter of 2025 economic activity shrinking at a 1.8% rate. This updated real-time estimate is unchanged from the last week. It's also worth noting that the benchmark blue chip consensus forecasts are starting to waver now too, as the quarter comes to an end. Across the Pacific, Singapore's industrial production took quite a tumble in February from January, enough to turn its year-on-year change from an 8% rise to a 1.3% decline in February. The month-on-month reversal was a very sharp 7.5%. In Europe, the UK said their inflation rate dipped to 2.8% in February from 3% in January, marginally below market expectations of a 2.9% rate, although in line with the Bank of England's forecast. In the EU, facing security threats from Russia, and a US ally that is pulling back and effectively encouraging Russia, is saying every citizen should stockpile enough food to be self-sufficient for at least 72 hours in the case of crisis. Most EU states are sharply raising defence preparedness. And Australia is in its post-budget debate period. No announcement yet on the election date, but it is widely expected over the next few days. The US Treasury 10-year yield is now at 4.34% and up 4 basis points from yesterday at this time. And Wall Street has started its Wednesday session dipping a further 1.2% on the S&P 500. On a tech sell-off, the Nasdaq is down 2.1%. And the price of gold will start today at just on $3,016 an ounce, down a net $10 from yesterday. But oil prices are up $1.50 from yesterday at just under $70 a barrel in the US, while the international Brent price is just on $74 a barrel. The new American tariff threats on using Venezuelan oil are disrupting supply. And the Kiwi dollar is now at 57.4 US cents and unchanged from this time yesterday. Against the Aussie, we're back up 10 basis points at 91.1 Australian cents. Against the euro, also up 10 basis points at 53.2 euro cents. That all means our trade-weighted index starts today just on 67 and up 20 basis points. And the Bitcoin price starts today at $86,866 and down 1.1% from yesterday. Volatility over the past 24 hours has again been modest, also at plus or minus 1.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.